Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again what is going on here on the euro currency. So on the daily time frame, our suspicions that we have announced yesterday have been confirmed. So if you remember, we have said that as market doesn't intend to show the downward action that is suggested by bread and butter setup and stretch pattern, but within the 3 trading sessions market hasn't started move to the downside, and that is the worrying sign for the bears. And we said yesterday it's probably better to close any shorts position, because this market doesn't intend continue the logical action, then probably it will show the action in the opposite direction to the upside. And that has happened. So you can see that market has shown this move to the upside. That is in fact not the surprising action, because if you remember on the previous week we said that euro currency very often shows such sort of development. Take a look at any moment where market hits the overbought condition. Here, for instance, market hits overbought, sideways action, 1618 extension. So, for instance, just measured 1618. Okay. Now here, extreme overbought, shallow retracement, 1618 extension. Here is a bit different situation because this action was very significant. But anyway, this move to the upside stands in a row with the very often action that euro shows. I don't want to tell that this happens every time, but that is very often. But this is even not our major thought. Mostly we have found our assumption based on this action that market, as I said, hasn't started move to the downside. Well, what we have now, first of all, market has hit overbought again right at the fibs resistance, 131.64 area, 618 resistance of that move down. It was penetrated already here, but this is still the fib resistance level. Well, second moment that we also discussed yesterday is that it is possible that market will show move up, but it's not necessary that market will erase the weekly pattern, and that is invalidation point of the weekly bearish stop grabber, and it hasn't been failed, it hasn't been vanished by the price action, and this pattern is still here. So one of the opportunity for trading currently is based on this bearish engulfing, because by this action to the upside market has approached to the invalidation point, and by this action in fact contracted the potential risk for us. So it's a big difference to enter with the bearish stop grabber right here or right here. The stop will be quite different. That's why I think that it's really not bad idea at least to think about the taking shorts around this area based on the weekly pattern, because market really could continue move to the downside right here, and your risk reward ratio will be very attractive. Well, I don't call you to definitely take the shorts, but this scenario is worthy of our attention because in fact it based on the pattern that we have. We do not have any other patterns right now, any clear patterns. One pattern that I see is just a weekly bearish stop grabber, and it could work. Well, that's the first idea on the current market. On the 4-hour time frame, we can see that in fact all this price action stands inside of the range of this big candle, and the major development will happen when the market will show the exit from this range, either to the upside or to the downside. That is scenario for those who would like to make the 100% bet, or at least the bet with the high probability on the potential move. So the safest way to act is just to wait when this confusion action will end and market will choose the direction. Because currently this is in fact some sort of the indecision. So market is fluctuating inside of this range of this big candle. And from that point of view, the borders of this range become very significant. And in fact, very probable that whatever direction the market will choose, the further development will follow with this direction. So if it will be breakout to the upside, the market probably will continue to move higher. If it will exit to the downside, then probably this will happen. Well, and the last moment to watch for today, during today's trading session, you know that today the Bernanke will speak to Congress. That could be really significant speech. That's why it adds some more nervosity on the current markets. Well, be ready for potential volatility that could exceed as closer to his speech to the Congress. Well, and last moment to watch for on today's euro currency is on the hourly time frame. Take a look at this range that we have discussed yesterday. So I can't call it as any pattern or something, well, because it's more like the consolidation probably. Sideways consolidation. Market has shown the breakout. As you can see, was resistance, breakout, support, attempt to continue move higher. Market has hit the daily overbought and now move down. If market will return right back inside of this range, be ready to move at minimum to the opposite border, or that could be the confirmation moment for our bearish idea of trading on the weekly time frame. Because the moment that if market will move below this border could be some sort of the signal that probably market could even start to work with the bearish weekly stop grabber and could lead market significantly lower. That could be just some kind of the short-term capitulation of the bulls if market will return right back inside of this range. So if you will take the short position here, as we just discussed, your stop should be above this high, and you should keep an eye on the development of the price action around this border. If market will move to the downside, well, that will give you more confidence that market will continue to move lower. That will let you to move your stop to the break even and just watch how market will behave with the speech of the Ben Bernanke. Also on the 4-hour time frame we have not small but not bad looking bearish engulfing pattern. You can see the small pattern is here. So decide how you will act on today's euro currency. In fact, honestly speaking, the current situation on the euro currency is not very attractive for the trading, but since this is our major point objective for our analysis, well, we have to discuss the situations that are appearing here. And in the current environment, I feel that bearish position here has more foundation. It's more reliable because it has on the back, it backed by the bearish pattern on the weekly time frame. You can't tell something of that sort about any bullish position. Besides, market at overbought. It's not very attractive to take the long position right at overbought and the fib resistance. Well, that's why odds suggest, in my opinion, is that taking short position here will be safer. And it has not bad risk-reward ratio. It has some plan of development, so we know what to watch for. We need to watch development to the downside. We will watch how market will behave this range. Okay, so we know how to track this position in time. That's why, for me personally, this position is more preferable. Well, but as I said, the safest way, if you would like to take the position on daily time frame, it's better to wait how market will behave with the borders and to wait the breakout in one or other direction. But this could take some more time. As you can see, market in fact stands somewhere in the middle of this range. So that's my current view on the market. Market is really tricky. The volatility probably will rise as the testimony of the chairman of the Federal Reserve will start. So That's not easy to trade to trade your currency in the current moment. Try to pay attention to the details that we have just discussed. Maybe I hope that they will be useful for you.